Thanks for joining me with my market report. My name is Mike, and my market report is on mortgage rates. We get into discussing what's impacting mortgage rates on a daily basis. Sometimes it could come from the economic calendar, could be from headline news, or perhaps combination, or even the geopolitical. We also kind of let you know if there's any market sentiment change, whereas now good news is bad news and vice versa, because that could get really confusing for somebody who might be watching and not understand why things aren't going the way they are. If we're having good news, that should be good, and it's actually doing the opposite. So we like to give those explanations for you, let you know what's going on here with the market. A little bit about myself is I'm a loan officer. I do work with the national lender. We do loans in all 50 states. So if you're looking to refinance or purchase, we'd love to talk to you. But more than that, we'd like to be able to help you out with the answer any questions you guys might have and be a resource for you folks. So please feel free to reach out. We are here to help in any capacity. So without further ado, we'll jump right in and start off with the economic calendar. First up will be the pending sales for the month of February. So January, we had 109.5 thousand. So it got revised slightly lower to 109.4 seasonally adjusted units. But for the month of February, it dropped down to 104.9. So that's a 4.1% drop in the sales. We also got consumer sentiment, which is a uh, survey done by the University of Michigan, and anything above 50, is usually good. Well, actually, that doesn't apply to this one. My apologies. It did slightly drop, so it went from 59.7 from in February. It was expected to remain unchanged, and it actually dropped slightly by zero point 0.3 points to 59.4. Now, what's driving things? Obviously, we got the inflation. That's what's kind of driving consumer sentiment. We're starting to get a little bit of that. But we're getting a lot of hawkish talk from the Fed. Again, a lot of people think that we could be facing a lot more, lot larger increments coming forward. So instead of quarter increments, we could be facing maybe several of these half a point increments. And it's been pretty hawkish this week in terms of what the Fed members have been speaking about. And so they're getting prepared, and of course they're preparing for the worst. So if we do get anything like a quarter point, next one will probably be good news, and you might even see a market rally. However, because right now they're kind of pricing in probably the worst case scenario right now. They're getting concerned that there could be several half a point increments. It might get us up to the 3.5 to 3.75 range here sooner than later, than versus the 2.5 to 3% range that we talked about before. So due to that, again, the larger increments. Now, there's also a report that came out that China might come in and settle for less than full control, basically, of Ukraine, so to speak. And because of that, that is kind of hurting yields, mortgage-backed securities, and mortgages. So it's kind of moving back, shifting. And typically, we'll get like a Friday kind of, especially with with the time war and everything else going on right now. We would be a safe haven, but today we're just getting shellacked here again. And because of if they do settle in for less than full control, so to speak, that's kind of going back into the equity market. So we're seeing some money flow back into equity markets. The only one that's really a negative is Nasdaq, and that's because treasuries are spiking up here. As you can see here, we're already at 2.48 basically range here, spiking up. We're at new highs. Mortgage-backed securities are just dropping and dropping. Are down about 77 basis points. We've already had several price changes for the worse, so reprices since we came out this morning, and so unfortunately, it's not looking good for mortgage-backed securities. So let's go ahead and take a look at the volatility of today. So as you can see, we kind of went up. We've been downhill ever since then. We've been kind of, for the most part, going down here. And again, the biggest, not real big explanation is just that some of the money is just kind of flowing back into the equities market right now. Um, so lastly, we'll touch on what's the average conforming loan rate. 30 years at 4.71, and the 50 years at 4.07 currently. And those are, again, got points built in. Again, if you guys want to rate, if you guys are looking for rates, please feel free. We're here to help you guys out. We can give you a quote if you like. And again, we're here to help you guys. If you guys got questions, please reach out. Meanwhile, if you guys like these videos, please smash that like button and help us out and share. We greatly appreciate that. We appreciate you guys taking the time to watch, and thank you very much. You guys have a great rest of your day. Enjoy your weekend. We'll look forward to see you guys on Monday. Have a great rest of your day. Bye bye.